Hello and welcome to Edison TV. I'm Yoojeong Oh, Director of Investment Trust Content at Edison, and today I'm joined by Yoojeong Oh, who is Investment Director on the Aberdeen Asian Equities team and the Investment Manager of the Aberdeen Asian Income Fund. Yoojeong, thanks for joining us today.
Thank you for having me.
Can you maybe start by providing a high-level introduction to the fund and its investment strategy?
Yep. The Aberdeen Asian Income Fund is a closed-end equities fund that targets the income and growth potential of some of Asia's most successful and promising companies. We have an extensive knowledge network in the region, thanks to the 40 or so in-house analysts that we have based across Asia, who are constantly looking for quality companies that offer good capital and income growth. The fund yields about 5.5%, which is quite a nice premium to the benchmark index yield of 2.7%. And we're a team of stock pickers looking for companies with good quality business models, with strong balance sheets and cash flow generation, operating in a structural growth environment, all of which point towards reliable earnings and sustainable dividends. As a closed-end fund, we use leverage to modestly enhance returns. It's very small at the moment, though, at about 8%. And we also have about 20% of the fund invested in small cap companies. So these are companies with market capitalizations below £2 billion. This space in Asia can be very exciting. And we again use the local language skills and knowledge network of our team to uncover companies that offer the same balance sheet and growth qualities whilst being small cap by nature.
Thank you. That's very, very helpful. And can you maybe now elaborate on the key sectoral investment themes you have identified across Asia?
Yep. So first, I think Asia is set to drive global economic growth and expected to account for more than half of the world's GDP growth by 2025. There are some major demographic dividends in Asia still to be realized, led by the giants such as China and India, but also followed close on their heels by high-growth Southeast Asian economies such as Indonesia and Thailand. Second, I think the focus on dividends is growing across corporate Asia. So close to half of the Asia-Pacific ex-Japan benchmark now yields more than 3%. There's a definite move towards improving shareholder value in the region. And we've seen countries such as Korea announce their Value Up program this year. And we continue to see growing focus on shareholder returns in markets like China as well. So, for example, having not owned Chinese internet for a long time due to their low yields, we initiated Tencent when they formalized their dividend policy, linking it to free cash flows. We added to Tencent on share price weakness. And just this month, they've again increased their returns policy through dividends and buybacks. And thirdly, I'd like to touch on dividends being found across sectors and geographies in the region. And I think Asia really enjoys a lot of structural growth themes. So technology hardware, for example, is the highest weighted sector in this fund, as some of the world's leading semiconductor and foundry companies are found in Asia, with ungeared balance sheets and a good earnings outlook supported by growing demand for data usage and data storage from new technologies such as artificial intelligence and smart devices. We also don't own a lot in India, which has historically been a low yield market. The domestic index in India yields just 1%. But what we do own in India has done very well for us. Companies such as Power Grid of India, which is like the national grid there, provides exposure to the energy transition theme. And this has been a good share price performer, and it pays a good yield of 4%.
Thank you. That's very interesting. And there are definitely a lot of interesting investment opportunities in the region. Now, maybe can you also share your views on the current valuations across Asia? So in which markets do you currently find more attractively priced opportunities?
Yeah, so I think valuations look pretty attractive in Asia at the moment. The region is trading at a price to earnings multiple that is cheaper relative to what it has done over the past 10 years, and also cheaper than where developed markets are priced today. So coupled with this, we've got earnings growth in Asia forecast to be double digit for the next 2 years, which also compares well relative to other global regions. As stock pickers, we look for those good quality companies at the right prices, regardless of where the business is listed. Of course, markets like China, which lagged the Asia region over the past 2 or so years, now offer some interesting value opportunities. There's also Indonesia, which is often overlooked for India, which has been getting all the juicy headlines. But with 1 billion people and a large youth workforce, should Indonesia really be trading at such a discount relative to India? And I think there's really pockets of value to be found across markets and sectors. And this is something that we hope to capitalize on by leveraging our in-house analysts across the region.
Thank you. That's very helpful. And now, can you also discuss the income outlook across your portfolio? There was a significant increase in the dividend paid by the fund recently, and your 15-year dividend growth record means that you qualify for AAC's next generation of dividend heroes, right?
Yes, that's right. The Aberdeen Asian Income Fund is an AIC next generation dividend hero fund. We've been paying a growing dividend per share for the last 15 years. Most recently, the dividend for full year 2023 was a fully covered dividend that was up 17.5% year on year. So our aim is really to maintain a growing dividend, as we know this is valued by our investors and also by me as a fellow shareholder in the fund. The earnings growth in Asia that we discussed earlier at double-digit growth rates for the next 2 years also bodes well for dividend growth. And we believe the risk of dividend cuts are low, all things being equal, given the strength of balance sheets and the free cash flow cover for dividends in Asia. And we also have a revenue reserve balance of just over 4 pence per share, something that offers a bit of buffer should there be a need for it in the future.
Thank you. And finally, there have recently been some changes to drive alignment with shareholders, including a fee reduction and reinvestment of management fees programs. So can you maybe elaborate on this as well?
Yes, that's right. So the board have reduced the management fee to try and ensure that shareholders get the best value from their investment in this fund, and makes this fund a hopefully more compelling contender against its peers as well. And moving to a market cap base also improves alignment with shareholders. As you mentioned, we have committed to reinvesting 6 months worth of fees back into the company, which we believe further demonstrates our support for the closed-end fund sector.
Yoojeong Oh, investment manager of the Aberdeen Asian Income Fund. Thank you very much for your time.
Thank you.